Oh, hi everyone. Welcome to this webinar, to this session where David and I are going to be looking at stocks. Are we looking at commodities as well, David, or just stocks today? I think it's primarily stocks today, day trading, stocks using VPA and some of our quantum trading indicators. But before we start to look at some charts and see what's been going on in the markets, can I just draw your attention to the disclaimer that I know you can see on your screen? As you know, trading can be a very risky business, so please don't ever think of using money that you cannot afford to lose. Now, I said this morning, so I think in the Forex session, and obviously most of you were with us then, and I would just like to make the point again, is that in this business with trading, losing money is a given. That's it. You are going to lose. At some point, you're going to lose a little bit or a lot. We hope that, it isn't a lot, but losses are something that we all have to get to grips with. And it's really, really difficult because none of us likes losing, because it has overtones of failure. And I didn't say this morning, but if you use a kind of sports analogy, you wouldn't expect to do any kind of sport and never lose. I know, you say, well, my money's not at stake. Well, if you're a professional sports player, if you lose, I know some people, just take some money for participating, but the whole point is to, there is always a financial reward. But seriously, we all have to lose. And we have to get to grips with it, and we have to understand our mindset towards the idea of a loss. How does that impact our emotions? How does that impact us? What do we take away from when we do lose money trading and investing? I hope the one thing to do take away is that whenever we lose at anything, you make a mistake. There could be all sorts of reasons why, but generally speaking, if a football team loses, they learn from their losses, they learn from that loss, and if you hear them being interviewed, they say, well, why do you think that didn't go very well? And they will give you 10 reasons why it didn't go the way they wanted it to go. When you ask a team or a manager, you won, why did you win? They're very vague. Oh, well, we played better, we did this better. So you do learn from losses. I hope you do, and you take those away, and you put them down to experience, and hopefully you won't make the mistakes that you made from that. But you've got to stop taking it personally and letting it get to you. I also said this morning a phrase, and I don't know where it came from or where I heard it, but losses being painful emotionally, sometimes you physically feel it affects you physically, is all part and parcel of our evolution, because it's our brains, if you like, keeping us safe, learning from our mistakes. The first time back in the day when we were rampaging across the savannah, you came up against a predator, and you were lucky and you got away. Well, that was a learning situation. The next time that happens, you're going to keep away, so the brain retains that, and that fear that's triggered when you're in that kind of situation. So what's happening in your brain is the brain always remembers bad things, because it's the way of keeping you safe. It says, look, hey, this is what happened last time, you really don't want to be in this situation again. And what the psychologist or psychiatrist came up with is the brain, bad experiences in your brain, they're like Velcro, they stay there. Good experiences are like Teflon, they slide away. It is partly in our DNA, and partly as a mechanism of helping to keep us safe. We just have to, I'm going to say, we fight it. We have to be aware of it, and we have to manage it. But to get back to my original point, you have to accept, you know, whatever money you put into the market, A, you can afford to lose it, and secondly, accept that you will lose, hopefully just a little bit. But you know, if you don't apply good risk management and you know, your money management, then the chances are you will lose all of it. Anyway, I'm sorry to sound a little bit on a downer, but it's really, really important. Now, I hope with you know, coming along to us and reading the book about VPA, and those of you who have our indicators, will give you that little bit of that, what they call that edge. You know, you have that understanding that most other traders and investors don't have out there about why, you know, what is price action? What are you looking at as a chart? Looking at the chart pattern, looking at the candle patterns, looking at the support and resistance. And the VPA methodology, David and I strongly believe, firmly believe, that it will give you that edge above, over and above your fellow traders and investors. And this is the book on Amazon, which lays out the basic concepts. And as I've mentioned, those of you who come regularly will know, there is a companion book of worked examples, because the beauty about this methodology is the signals, the setups, the configurations that you see on your charts, they repeat in all time frames, and you will begin to recognize them. And I've got some really nice examples of for some charts that I've pulled up for today. What I'm trying to do is have a kind of narrative on some of the charts that we've looked at over the last sort of few weeks, few months. I will be adding to them and just following up on one or two, particularly the ones where patience is required. I've done a lot about selection. We've looked at FinViz, we've looked at Market Beat. If you want to catch up on the criteria selection that we use, that was in last week's webinar. It went over, it was quite a long webinar, but it showed why I was using FinViz and the parameters, over 1 million, relative volume of over 1.5, and that threw up you know, all the stocks. It changes on a daily basis, and then a quick flick through all the charts. But as I said, you can do a big catch up on last week's webinar. And just to have a look at VPA and place it in its in the a lot, you know, in the chart, if you like, it's volume, price, candles, patterns, and this support and resistance. And then on top of that, you do have indicators to help you. That's what indicators are there for. But you've got to understand indicators have been developed for certain chart conditions. What VPA tells you is, where are you in the journey of the price cycle? Are you in a trend? And what kind of trend is that? Is it a volatile trend? Is it a smooth trend? Is it a choppy trend? Are you in congestion? Are you waiting for a breakout? And as I said, all these indicators that you find, standard indicators on your platforms, they all support that basic analysis of the price cycle. And of course, we always look at the price cycle in multiple timeframes. We have proprietary indicators, and everything is overarched with time, the time of the chart that we are trading, and as I said, multiple timeframes. Right, very, very quickly, markets. As I said this morning, one of my emails, daily emails that hit my inbox, essentially, it was a note. I think it came from Bank of America, and they kindly, the people over there have basically said markets are weird. The volatility is weird at the moment, and you know, I think looking at the kind of price action that we've been seeing over the last few days, it sure is. I mean, weird is probably as good as description as any. It's been up, down, sideways. You know, here we are. Oh my goodness, what's happening with the? Is this the Dow, David? It's up. What's it up? 500 today. If we go back here, we had down, up. Okay, I think that's a weekend one. Then we had down yesterday. Then we had an up day with a candle yesterday again. But look at that candle. It was down very heavily first, and then it went up. And this is today. What's happening on the Russell? The Russell is also strongly higher than NASDAQ. Yes, that's strongly higher as well. Have a look at bond yields, because the 10-year is the one that everybody is keeping a very close eye on. The key level now, as I said this morning, is 1.55. Any retreat back to 1.5 and below, market is going to be very, very happy, basically. So why is the market suddenly very, very happy? Let's see what's been going on. I suspect there's, we talked about it last week. I talk about it, I write about it on my various Facebook pages. We talk about it in our analysis. There is a laundry list of things that have been upsetting the markets recently. The latest one that has been, the latest headline is obviously the raising of the debt ceiling. Here we are. How did I guess? The debt ceiling, the Dow up 400. I read on my newsfeed that a deal has been reached on the short-term debt deal. Oh well, that's well, there we are. Everybody's happy. But there are still, as I said, there are still huge problems out there. The energy crisis in terms of the cost of energy with natural gas. The reason why it went up yesterday is because Putin has kind of said that that don't worry, he's going to take these hands off the gas taps in Russia. This shortage of gas is also connected to what has been happening in China. And I don't know if you recall, I think we mentioned it in one of our Forex webinars. Oh, this is weeks ago. If you China had a spat with Australia, because Australia said, really to do with the virus, we need to investigate it a bit more. China took umbrage and basically cut down or even might have stopped the import of Australian coal. Australian coal it's one of the biggest exports to China because it fires all their coal-powered stations. That's their main source of energy. Now, I appreciate, they then, it was all wrapped up in, well, we've got to go to a cleaner source of energy, but they kind of cut their noses off to spite their faces, because they are having an energy issue as well. And what they've done is they've just gone out into the market and bought everything. And if you look at the natural gas chart, it is a classic chart where we had a long period where nothing happens very much. It's very much like some of these stock charts that we've been looking at, and suddenly it shoots up. I had another email from Bloomberg's where there was some suggestions, there's a bit of a Machiavellian maneuverings going on in the background to do with nat gas, in other words, manipulation. But anyway, that's the situation. Plus, we're coming into earnings seasons as well for stocks. That's going to cause another bout of volatility. So generally, sort of take your pick. I'm going to talk about insider trading as well, because we picked it up last week in relation to having a look at what the insiders are doing. And by the insiders, I mean the people in the companies themselves that we are looking at, who's buying and who's selling. And of course, that has implications for the Federal Reserve, because two members of the Federal Reserve have resigned, one on health grounds. Apparently he needs a kidney transplant, but the other one is because last year they were kind of trading, they were involved in active trading, and they're not allowed to. Hey, listen, these are people on the FOMC who set the monetary policy, and they're trading in shares. Well, are they? How is their decision? How objective are they going to be when setting monetary policy if they've actually got direct skin in the game? There's ways around it. There's blind trusts and what have you. And also the vice president of the Fed, Clarida, is also, I think the press are going to go after him as well. And we've got Jay Powell coming up for re-election. Now, why does that matter? It matters because with the two people who have left are known hawks. So they are allegedly supposed to have quite a hard line approach to raising interest rates. They say, look, if the criteria is met for raising interest rates, that's it. The interest rates go up. That's it. No questions asked. A dove is more, well, they take, I wouldn't say they take a broader view, but they sort of say, well, yeah, but things aren't so clever. The economy's not doing very well. Unemployment is it's not so good. We really can't afford to take this interest rate raising decision. It's not such a binary decision. That's what I'm trying to say. Now, with two hawks gone, Clarida, I'm not sure. I didn't have time to go and check out where he sits. He may just sit in the middle. Jay Powell is kind of, although he was a Republican, he is a Republican and appointed by Trump, so you would think he would be more on the hawk end of the spectrum, as it were, but I think he's kind of more of a centrist, and he's certainly, what he's done has certainly been supportive of keeping interest rates low, lots of QE, which has benefited the stock market. So you could say, well, it's kind of benefited them as well. The optics are not very good, as they say. Now, Elizabeth Warren doesn't want him. She thinks he should be replaced. If they do replace him, he's up for reappointment, not re-election, reappointment February of next year, but obviously the decision's got to be made. You could then end up with a Federal Reserve that truly reflects, there'll all be dubs. There won't be any dissenting voice on there about whether interest rates should be done. That is going to have a major impact in what happens in the next few months. You're going to get more QE. Is that going to be more? There's all this money sloshing around that's being created. It's got to find a home. It's got to find a return somewhere, and that's part of the reason why the stock market has been roaring upwards. Right, insider trading. Got to look at insider trading with particular reference to one stock that I've been looking at, and that's Amgen, which I've actually got up here on my MT4 platform. The MT4 platform is it's great. It's come on absolutely leaps and bounds. I've got Amgen. I've only got Amgen, BlackBerry, because if you're just starting out into day trading stocks, and you don't want to go, you haven't got enough money to open have the margin for it, or you don't want to go down the options route, which is where a lot of new traders go with stock trading, particularly in the States. Well, if you have access to a broker who offers MT4, you will find a lot of them do actually offer stocks as part of their offering. And what I have here, I have obviously the VIX, which is on, I've got the daily, and just to see, because why you need the VIX, you need the VIX because if the VIX is falling, the markets are in a good mood. Although this is direct, it's much more to do with the S&P 500. There is a VIX for the NASDAQ, there's a VIX equivalent for the Dow, there's volatility indices for practically every asset that's out there. But the VIX generally, the S&P is good enough to tell us, and the levels we have to watch. If I just put, have I done with it? VIX, no, I seem to have I got rid of it. Oh, I'll go and look at it somewhere else. Hold on, I've got it somewhere else here. Let's have a look at it. Yes, I know. I clicked it off and then off it went. Right, there we are. There we are. If I go on the daily chart, there we are, and I actually scrunch it down. The levels of the VIX, the way the VIX works is, when it spikes higher, as it does here and here and here, and if we go back to 2008, we're looking at levels in the 80s. There is massive fear out there in the market. When the VIX is up here, that's when you should be looking to buy, because markets are crashing, and at some point they're going to stop, and there is going to be a buying opportunity. And when it's very, very low, as it is here, sometimes it actually gets into single figures. I've only got it going down to 16, but if I here we are. That's a good example here. We're down to 13. I think the lowest we've ever seen it is about 8 or 9. It's people say it's greed. we like to use the word complacency. It's the markets are complacent. That everybody thinks this market is going to the moon. You know, it's not going to stop. That's it. Everyone's wrong. You know, this time it's different. That's it. That's it. And it can stay complacent for an awful long time. In between times, you have different levels, and the way you kind of have to play it is, at the moment, we've had, you know, the Dow's been making some big falls, 400-500. You know, we've had some big numbers and big candles, but the VIX hasn't really kind of spiked higher. You would think it would be going up to, you know, beyond the 30s and what have you. The fact is that it's at 20. It's also at the volume point of control on the daily chart here. And it's kind of creeping lower. It kind of tells you, yeah, the markets are volatile, fantastic for trading, but this is not the big short. This is not, you know, the VIX spiking up to 30, 40, 50, 60, as it were, which is what you would expect in a major crash. And the other thing about the VIX is, as well, is people, managers and traders and investors, they use it to hedge. And it's like insurance. They always buy when it's expensive, you know, that when actually you should be looking to buy when you should be looking to hedge when, you know, if you've got your portfolio is going in one direction, you'll trade in one direction, and the VIX is going in the other direction. Well, you know, that's the time to maybe look to buy some calls. You don't want to buy calls when it's up here. You're actually really looking to buy calls when it's the market is completely complacent. You know, it's just the way it works. But human nature being what it is, we are all very contrary, all do the exact opposite, you know, that we should do. And in trading is no different. In trading, it's just you know, it's just the way it is. You know, people buy at the top and they sell at the bottom. Hopefully with VPA you won't be one of them. Right, that's what I wanted to say there. Let me just bring up my thing, but just to quickly, I'm not going to spend as much time as I did last week. There we are. These are the stocks that I have been looking at, and there's various reasons why I picked them. Amgen, which we saw on the MT4 platform, we talked about insider trading. Amgen is really interesting, and in fact, as you know, just very quickly, in case you weren't here last week, this is what I use. I use FinViz on the screener, which is average volume over 1 million, relative volume over 1.5, and it throws up, that's energy, it just throws up any, there we are, and you get pages and pages of them. And then you can go through the different sectors. You know, you can, I'm not going to do sectors again because I'm not saying we've done them to death, but you can then, as you whiz through, you can get an idea of which sectors are, you know, are actively being traded at the moment. And this kind of screening also gives you an idea of where the money is flowing into. And it's been energy, because energy, talking about inflation, inflation is on the laundry list. Energy stocks and the energy sector is also used as a hedge, because when inflation you know, takes off, you still have to pay for gas, you still have to pay, you know, energy is one of those things where we've really got no choice. You either freeze to death or you don't drive anywhere. So the oil price, you know, that's why partly the oil price is going higher, and then it's kind of, it gets into a feedback loop. You know, money starts to pour in and people say, oh, I can make a return, because investing and trading is all about a return. No, I have some money, and where can I make the best, you know, where can I get the best return for my money? Right, then we take it over here to Market Beat. In fact, I can find, where's my Amgen? Here we are. We talked about insider trading, insider trades here. And what's interesting when you look at the chart is you see the sheer amount of selling that has been going on. I mean, very, very, very little buying, very little buying. And it's just interesting because it kind of, that's going to put pressure on the price, basically. And when we look at the chart, let's have a look at it without anything at the moment. Here we are. It's picked up today. It's been in this sort of very long downtrend. Now, Amgen is not one that you know, I just chose it just to show how, you know, with all this selling by the insiders that is going on, it's one to possibly, it's a metric to perhaps consider. And the other metric, I don't think I've got it here, this is AMGN. The other metric, which we kind of touched on last week for trading, is what the beta is. Now, beta is basically how volatile the stock is, and for day trading, that's quite low. You want it, you don't want it too high and you don't want it too low. 0.68 I think is a little bit too low. It's steady, but you know, $211, you can see why it is steady. If you look at a biotech stock, sometimes that beta is 4 and 5. That is going to whiz around all over the place, but it's just a metric. So once you've done your selection and if you know you can fits all the criteria that you're looking at, do keep an eye on, do go and check the beta, because if it's very, you know, if you are only going to, particularly if you are going to be on the faster time frames, you know, it could work for you, it could work against you. Be prepared. If that's a high number, then it is going to whiz around all over the place. Right, just to recap on a stock from last week, which I'm pretty certain I mentioned, was SWM, was Southwestern Energy, which is this one. Yes. And what I actually said was I thought that this was a trap move on the chart. Now you can't have it, you can't see it here because the volatility, this indicator here, this chart, this big up candle. Look at the big up candle there, and look at the amount of volume underneath it. Oh, I think that's great, that's fantastic, that's going to go whizzing higher. But because we have developed these very, very special indicators, particularly the volatility indicator, and I keep losing my VIX and I don't know why. Let's shut that down for a minute. Let's have a look. Let's have a look here. I don't know. Why does this always happen? I don't know why with Ninja. I love Ninja to death, but it's suddenly all my charts sort of, they never come up. Yes, gonna have to. There we are. They're coming up. No, it's fine. Don't worry. And that one goes up there. Right. Hopefully that will stop nicely there. Right. Let's have a look. What is it? SWN. SWN. Right. I've actually got 3. There we are. And this is what I said last week. Right. This is that up candle, which kind of almost came out completely out of the blue. Fine, whatever reason. But it also came with what we call the volatility trigger. This is triggered in real time, and we know a number of things that will because it's been triggered. We know there's obviously massive momentum has come into the market. There's also a lot of volume underneath it, but when it is triggered, we know 1 or 2 things are pretty certain to happen. The first thing is there will be a retrace into the spread of the candle. Even if the price carries on up, you will always get the price action going back into the candle. If it doesn't carry on higher, then one of two things happen. You will either get a reversal or you will get congestion. Now, we got a reversal, we got a little bit of congestion. We actually had some more buying coming under this candle here, you can have. But generally speaking, the volatility candle, the spread of the candle, the high and the low, then acts as resistance and support. But it's a trap. This is when this happens, this is always a trap, because what it triggers is FOMO, fear of missing out. And if SWN has been one of your, one of the charts that you've been watching and watching for a good entry, you suddenly see this, oh great, that's it, and in you jump. And more times than not, it will reverse. And we've seen this in CEI was another one, and it's also a kind of pump and dump as well. It's pumped up with lots of more than one volatility candle, and then bang. I mean, we called them fallen angels about 3 or 4 sessions ago. But what happened yesterday, we had the reversal, then we had the congestion, and then wham, we had it down. I said, right, that really does confirm that this was an almighty trap. It's not a hugely expensive, it's $6, whatever it is. And but that's painful. That is still painful. And it's one of these things that, oh my God, how could I have been suckered in, sort of thing. And it makes you feel terrible, and your brain remembers it. And every time then you see it, you think, oh my gosh, and it adds that little bit of hesitancy and a little bit of extra fear that's added to, when it's time to press that button and take that decision and put that money in the market. Because remember, your brain, bad experiences are like Velcro on your on your brain. It's very difficult to shake off. And as I said, I was just not delighted, but I was pleased that in fact our initial David and I, when we looked at it, said, yeah, that's a classic trap move, and it's actually bad. Now, what's going to happen now? As I said, what to look for now is really the high and low of this candle, and obviously the volume. It did trade within the spread of the candle, the nice trades in there. And I've got the minute and the 3-minute chart here, and you would just read it in exactly the same way. It's not a hugely, you've got a lot of price action here, which really doesn't move very much, and we know it doesn't move very much. It's very stuttery because this indicator we have here, which is the tick volume, that's just the tick speedometer, which kind of picks up the speed behind the price action. When it's red, it's very, very desultory, and you can see here, yes, it has gone up, but oh boy, it's really, really labored. Orange is kind of in there's a little bit of activity going on, and green is really very, very active, and you've got a really, really nice waterfall. That's bang into the close last night, but there's a lot of volume under that candle there, and you think there's a big wick. So the end of day candles on certainly the daily time frame, and even the shorter, the faster time frames, can actually sometimes set up what you think might happen in the session that's going. I mean, the great thing about stocks is I know some stocks trade pre-market and post-market, but I'm just looking at them actually having a physical close, and they all close, open and close at the same time, unlike Forex, where you have to take account of what is happening on the different sessions, because you get a fresh set of traders coming in and different fundamental news, and that can completely change the sentiment of that particular session. And the SBRA is the one I had up there, SBRA, which was this one. And this is looking at a candle on the daily chart. And it was also one that came up on the stock selection, which is absolutely great. Now, it's very, going off one candle, you do have to, exercise a little bit of judgment and a little bit of caution. But this one it's got a decent amount of volume on it. It's on the bottom of some volume support. This volume support here, these lines that go across here, they actually mark the boundaries between the high volume nodes and the low volume nodes. They're all derived from the volume point of control. This is volume and price over time. I mean, we've had a beautiful move lower actually from the break from the VPOP. This is on the daily chart, but it could be any time frame. Then you had this effort to rise, but look at the volume underneath the arc candles. It went a little bit. Then we had a shooting star candle, and we've had the second part. So this is our primary trend. This is a secondary trend. Again, cycles, trends, secondary trend. And then we had the resumption of the primary trend lower. Look at the volume under the up candles in the move lower. Nothing really to write home about. we had a lot of volume under there, and you think, okay, well, that's going to keep, carry on down. But if you look at the spread of that candle with the amount of volume that's underneath it, it is actually anomalous. So within that candle, there must be some support coming in, some buying support. They went a little bit sideways. This is interesting little candle. There's a lot of volume gone under there, hasn't gone anywhere, hasn't fallen, but it hasn't gone higher. Then you look at your support and resistance levels for the week. Then we get to the S3, down again we go, but we're starting to get a wick to the bottom of the candle, and wicks at the bottom denote buying, and then we get this beautiful hammer candle. And I said to David, I said, oh, that's a really nice chart. Let's see what happens at the open. And it really behaved exactly as we had hoped it would. It actually started to move higher at the close, and it's a bit of a drift. You can see here, this is what I mean about the volatility. First thing happens straight into the spread of the candle. Now this candle is interesting because it's got a deep wick to the top, and you think, great, okay, the top, forget what's happened here. Well, that's a nice kind of shooting star, that's bound to go down. But because it's the volatility, again, it's not a trap, because this is on the daily chart, this has been going lower. No, not necessarily. Then we have another volatility candle, and this is where we get the classic kind of congestion into the volatility. We really haven't had much green. It's kind of moving sideways, but it's looking at the daily chart, looking at the candle pattern and the volume on the daily chart, and see what is going on. Now I'm going to do one more, because this is HBI. I haven't looked at this on market beat. You need to go and see, we need to go and check out whether the earnings are coming up, the insider, all those other things. I'm not going to do that now because it'll be here forever, basically. Also, I would say about the, this is just one signal. It's been good today, but be aware, it is just one. One swallow does not a summer make. But the one I am going to keep an eye on is HBI, which is Handelsbrand. Let's have a look, because again, it's, and I want to, again, very similar, very similar, in fact, very similar price action at the open. Volatility, congestion. What we want to see now, we want to see a break above the high of this volatility candle. If it doesn't, then it's, fine. That is a perfectly valid signal. We're going to have to be a little, this is one of my, on my patient list, as it were, and this is a very deep candle, and it had a lot of volume underneath it. So definitely one to watch. And it's nice to see the hammer, the reaction to the daily hammer candle actually coming about, as it were. But also, this is interesting because there we are. Where was it? H. Let's have a look. Let's put it up here. HBI for the beta, which I thought was quite interesting. Yeah, which is the beta here. It's 1.51, which is not bad at all. FFIE is an energy stock, had a really nice waterfall. Maybe David could have a look at that. Workhorse, where's that? WK, very high beta. As I said, I've got all these stocks, but I'm not going to do them all today. We'll have a look at and see what's happened with them next next time around. So check out the daily, the daily closes, the kind of, if you've got a really strong candle on a daily close, keep an eye on it. You are going to get a reaction. You're certainly going to get a reaction, straight away. Do the other bits of research, as I said, based on what we have here at Market Beat. It's a fantastic free resource. You can check out, the short interest, the insider trading, the earnings, etc. But then just keep an eye on it, but don't get carried away by that one signal. Now, if you've got any questions, just drop them in the chat box. Either I or David will answer them, and we'll take it from there. David, can I pass over to you, love?
Hi everybody, very warm welcome wherever you are in the world. Good to have you with us. That's it. Sorry, I just lost my mouse for a moment. There we go. Let me just answer that question at all with regards to the indicators. Yeah, there's a whole swathe of videos to support the indicators. If you go to quantumtrading.com, I'll show you where it is at the end of the session, but on quantumtrading.com, there's a video section and there are hundreds of videos. And I always make the point that it's not just, you may be on NinjaTrader or you may be on MT4, whatever it is, whatever platform you're using, the videos are common to everything, the way we use them. It doesn't matter which platform you're using them on, the way to use them is exactly the same. So there are a whole load of videos there. There's also support pages, configuration pages, how to configure the indicators and use them as well. So it's all over there. You should find it all on the site, but I'll show you that at the end, if I may. Just move that out of the way for a moment. I've got 3 platforms here. I'm probably going to concentrate on 2 actually, which is NinjaTrader, the one you're looking at, and Tradestation I've got down here. But let's start with Ninja. This is one I'm sure you've seen before. This is the 3 indices, the YM, the NQ, and the ES. They're all pretty much doing the same thing today, which is always nice. When you're trading an index, particularly, or you're trading stocks, whatever it may be, whichever exchange you may be trading, you really want to see everything going in the same direction. It's pretty much like we do in the Forex world, where you're trading and you want to see a universal flow of that particular currency. In other words, everyone's either buying or selling that currency. It's the same effect here, if you like. And over the years, we have seen a lot of divergence between these 3 indices, where we've had the NQ rising dramatically and the YM falling on the same day, or vice versa, and we've had divergence between the 3 of them. So it's nice to see the 3 of them all actually going up at the same, pretty much the same rate, to be honest. So broadly speaking, sentiment across the markets is pretty much the same, or across the indices rather. And it's no surprise to see this today. If you look at what happened yesterday, I highlighted it this morning, huge reversal took place yesterday, this lovely wick to the lower body of the candle, lots of volume supporting that. So we know there's a ton of buying coming in, and it's no surprise to see this reaction today. And I make the point that whatever you're trading, even if you are an intraday trader, don't ignore the daily chart, because the daily chart will give signals and clues as to what to anticipate. It doesn't mean you have to trade that way the whole session, but it just gives you a flavor of what possibly to expect the following day when you're looking at the daily charts. Just move that one out the OA. This is the NQ, exactly the same. As far as this is concerned, it's coming up to the volume point of control, so we expect to see possibly some congestion building. It's also coming up to 15,000, which is a huge number. And over the years, I'm sure you're aware that, you know, we've made the point endlessly that whole numbers, big numbers, particularly numbers like this, you know, 1,000, 15,000, 15,500, 250s, 750s, those numbers like that. When you get markets approaching those sorts of big psychological numbers, if you will, you're always going to expect to see at least some congestion building. It's very unusual for a price to slice straight through one of these big numbers, largely because there will be orders sitting at those points. You'd be surprised how lazy a lot of the orders that go into the market, they're on whole numbers or they're on half numbers, fives and zeros basically. And that's why you see a lot of choppy price action intraday around these big numbers, particularly on the indices. So that's the NQ, and finally down onto the ES, which is the S&P 500. Slightly different in that it's moved away from the volume point of control. So it'd be interesting to see. I've got the volume closed off on this one at the moment because I've got so much data coming in here. I've got 3 platforms running simultaneously with God knows how many charts. So I have the volume closed off on the update on the daily. But it'd be interesting to see what that closes off at, and what we're looking for. If this candle doesn't close like that, it's nothing to say it could come all the way back down to the volume point of control. But let's assume it does close like this with a nice widespread up candle. The volume here will be absolutely critical as to, first of all, how much volume we've got, whether it's in agreement with that particular price action. In other words, is it anomalous? We look at benchmarking all the time, and if I'm looking across the chart here, for example, If we were to close like this, if we were looking at a closing candle, I'd be looking across here, just pull this back a bit so we can find some more. You're looking for an equivalent candle, something like that, although it's probably a bit smaller, but if that had closed up there, you know, what's the volume associated with that candle? And then you look at the daily candle that you're considering and really comparing the volume with your, in inverted commas, benchmark candle. And in that way, you get some idea of whether this volume that you're going to see under this closing candle is actually as it should be. In other words, is effort and result in agreement, but also is it in agreement with what's gone before over here? So you hunt for these benchmark candles the whole time. You look at the price action you're considering. You try to find ones which are similar, and then you compare the volume below with the volume that's appeared with your particular candle, and just try and get a benchmark of how true that volume is in terms of what you're actually witnessing. And if it's way out in terms of either low or high, then you infer and analyze it accordingly. Up the top here, we've got the 5 minutes, and as you can see, pretty bullish at the moment. Had a little bit of a pullback there. Volume falling away on those two, so that looks a little bit weak in terms of the recovery from that candle. Just have a look at the 5 minute, then we'll go over to the multiples. That's the NQ. You can see the kind of weakness coming in here. We've got this candle here, which is, you know, effort to rally and falling back. Exactly the same candle as here. These two candles, if you overlay that one on this one, what have you got? Exactly the same as that one, not quite exact, but you've got, you know, pretty much, you get the general idea. If you shove this one on here, you've got very little body and you've got a big wick to the upper body. So basically this is a 2-bar reversal, whereas this is a single bar reversal. So we're on a 5 minute chart. So if you go and look at a 10 minute chart right now, you will see these two candles will look like that on a 10 minute candle. Those are sorts of things you're always looking for. Bullish engulf, that's why bullish engulfing and bearish engulfing work in the way they do. You know, when you get a candle like this, which engulfs that one, basically what you're seeing is a fall to the downside and a recovery. So you've got a body up here somewhere, and you've got wicks, okay, to the upper body, but the vast bulk of the wick is to the downside. So it's giving you that clue, that indication of, excuse me, of, you know, bearish and bullish engulfing, and that's why these two candle patterns are so powerful. Just bear with me for a moment. I've got a frog in my throat. Sorry about that. So that's on the NQ, and let's just have a quick look at the ES. And the ES is coming up to the 5 minute VPOC. So we're expecting congestion there anyway, and you can see the volume falling away on those three candles. So you've got a really nice example of mini VPA in action, if you like. Price action's rising, but what's also interesting, the price is narrowing on the third one. So it's hardly demonstrable of, you know, a positive confirmation of these two. You want to see this one up here somewhere, but it's not, it's narrow, and the volume is also falling away. Bear in mind that when the market opens, this is 2:30 our time, which is when the US markets get underway. The volume will surge as it has done here. You will get volatility, which we have here. No great surprise, we always get volatility open. And then gradually over time, this volume will fall away to pick up the natural volume. So you get the surging volume around this region, and then you get the natural volume which occurs later on as the session settles, if you will, and gets underway. Let's go to the multiple workspaces, and I think I've got the, where are we? There we go. What have we got here? We've got the YM here, okay. And I've got various time frames. I've got 15-second, 1 minute, 3 minute, 5 minute, 10 minute, and the 15 minute down here. It's always I'll just pull that up because that looks nice. Whether you're using whatever approach you're using, multiple time frames are the key. The reason I pulled this up was because it's just another nice example of what I was talking about just now, which is where you're looking at price action. And this is what we call catenary price action, where the spreads are actually narrowing. And what the spreads are actually telling you in their own right is that the momentum in the move is running out of steam, if you will. It is running out of momentum because the spreads are narrowing. You know, price alone tells you that, because if the momentum were increasing, then the spreads would be increasing and they would be going up this way. They're not. You've got this rounding effect because the spreads are narrowing. In addition to that, the volume is falling away, but then be careful because the volume will automatically fall away anyway following the open. So you can't infer too much from that alone, but you can certainly infer it from the price action, which is narrowing as we move into the top of the curve there and really coming to a temporary pause point. And that's the reason I just wanted to highlight that, because it's a nice example. What else we've got going on here? We're trading around the VPOC there on 1 minute. Let's have a look at the 3 minute. Okay, we're getting up to the top of the volume point of control. We're starting to build volume here. The other thing about the VPOC on the histogram is these levels here are all price-based. This is off the accumulation distribution indicator. So they are price-based support and resistance levels, which I'm sure you're all familiar with and are a building block of technical analysis. The nice thing with the indicator is it actually presents them to you visually in terms of their strength. In other words, the thicker the line, then the stronger that level, and that's what the indicator does automatically. So this one down here has only been tested twice and held. This one is a very minor level, only been tested once, and yet these are much stronger, been tested multiple times, and therefore when you come up to them as support and resistance, you know, they're going to act accordingly. The VPOC can be used in exactly the same way, because volume acts as support and resistance in the same way that price does. So when price comes away from the volume point of control, starts approaching what we call these low volume nodes here, what you expect to see is the price moves through there pretty smartly, because there's nothing in the way to cause it to pause at that level in exactly the same way as you have with price-based resistance. So, you know, the VPOC indicator itself is used in many different ways, not least to highlight when price action is approaching. For example, on the 1 minute here, it's at the VPOC. What you always expect to see when price comes up to the volume point of control, you expect to see congestion. That is a de facto, because at this level, price is in agreement because the two parties are in equal opposition. There is no bias to one side or the other. It is a tug of war where the two teams are equally weighted. So the midpoint, the flag, the VPOC itself doesn't move, it sits there. It's only when you see an imbalance occur that the price action will then move away from the volume point of control and is either bullish or bearish, and it'll be supported by volume down here, etc., etc. So when the price action, if you've got a VPOC, and this is the other key point with regard to multiple time frames, when you have a volume point of control on a slower time frame, and bear in mind that a slower time frame will always carry more weight than a faster time frame, then it's a key level, because if you are trading as an intraday trader and you're not aware that you've got a volume point of control with this huge amount of volume sitting there, which is going to act as resistance to the move coming up from below, then you know you need to be aware of that. And it's just another facet of using indicators in multiple time frames and how to use the VPOC histogram in exactly the same way as you do with the price-based support and resistance of the accumulation distribution, or the MT45 dynamic support and resistance indicator, or on Tradestation or whatever platform you are using. Let's just go to, I tell you what, let's go on to Tradestation next, because that's where I've got a load of stocks. Now this is Tradestation version 10. Previously I had Tradestation 9.5, which is Tradestation Global, which is the partnership between Tradestation and Interactive Brokers. So if you have an Interactive Brokers account, you can link it straight through to the Tradestation platform. And in addition to that, we've also developed all the indicators for version 9.5. But this is Tradestation Securities version 10 and above, and is using the Tradestation data feed as the data provider. And what I've got on here are some very simple workspaces. This is basically the Dow 30, and I'll show you, I've got some others down here, which are Hot List and Market Scanner, which I want to go to in a minute. This is basically, on the left here, I've got radar screen. And I've chosen the Dow 30 just because it makes it so much easier on the eye, and I've got them all listed here. And down at the bottom here, I've got the ES, and I've also got the NQ, the continuous contracts there as well. If you've not seen radar screen before, it is hugely powerful. You can have up to 1,000 cells on here. So you can have 1,000 stocks or 1,000 whatever you wish and you can do a whole raft of things in terms of scanning and sorting and all the rest of it. I won't go through it all now, but I just wanted to take this as a simple example. So here we have the Dow 30 stocks on the left-hand side. The interval they're set to is a minute, and the indicators we've also developed for the scanner. So you can add, you don't have to have the scanner, but I would suggest that it's a huge help, because what it gives you, for example, on this particular stock, what it's telling me, and it happens to be on the 1 minute that 4 bars ago, on the 1 minute time frame on that particular stock, there was a volatility candle. So you can do a huge amount of scanning and searching, and it also gives you an instant view of what is going on in terms of the trend monitor, this indicator, the trends, which I haven't got on here at the moment, and I've also got volume today. Now you can have any number of indicators on here, and a huge number of variants, but it is just so powerful. The other thing I've also done here is up at the top here, I've got the symbol linked. I haven't got it interval linked, but I've actually got it symbol linked. And if you look over here on radar screen, on the radar scanner, radar screen, so I can basically click through these pretty quickly. So if I want to look at Microsoft, for example, I just click on that, and these are various time frames. I've got a 1 minute, a 2 minute, a 5 minute, and a 10 minute. With the trend monitor below, and obviously got volume in here. I've got the VPOC on here as well, and on this one I've got the accumulation distribution. So it just gives you a very, very quick way. Massive, you can see here it's even more demonstrable in this example in terms of how strong the accumulation distribution indicator. This works in exactly the same way as it does on NinjaTrader. The VPOC is here, this yellow dash line just below this blue dash line, and above it, you've got this hugely strong level, which is building at the moment into an area of either resistance or support, depending on how it breaks out. So you can go up and down these very fast. And this is, bear in mind, this is a very, very simple workspace. I could have multiple workspaces. I could have more charts than these. I could have hundreds of stock down here. I could have more variants over here, all sorts of stuff. You can change the interval down here very quickly. I could change this over to any interval I choose. I can have independent intervals, so I don't have to have them all the same. I can have them all different. As I say, it's just an enormously quick way of filtering through stocks. Once you've perhaps got a select list that you monitor on an intraday basis, so you've got a filtered list that you're looking at and you're monitoring, and you want to check through them, and but of course you can also have different workspaces. So you might have one workspace which is one time frame. You might have another one which is a different time frame. There are so many different ways of setting this up. As I say, this is just a very, very simple way of sorting and filtering and just scanning through very quickly. That's Caterpillar, one of the ones we analyze and talk about a lot. It's McDonald down here. Let's have a quick look at McDonald. There we go. And that's how quick it is, just scanning up and down. Honeywell. Have a look at Honeywell. Where's Boeing? There we are. Let's have a quick look at Boeing. So I just wanted to show you that as an introduction. That is basically a very simple workspace. Now, over on another workspace, there is another aspect which is equally important, and this is called Hot List. This is a standard app. If I just highlight that up there, these are all the standard apps that are available on TradeStation, which make it such a powerful platform. This was Radar Screen. We've also got Market Depth. This is the hot lists, which I've got here. What else have we got? We've got, so that's obviously charts. If you want charts, that's pulling up the charts. You've got a quick trade bar here as well. There's research, the scanner. I've got that set up. I'll show you that in a moment. We can also run time and sales. So there's all sorts of stuff. This is basically the hot list function, or a feature, if you like. And all I've got set up on here is percentage gainers on the day. But if I open that up, you can see how many options there are in terms of gainers, losers, different periods. Are we approaching 52-week highs, 52-week lows? You know, we had a gap down at the open, if we had gap up at the open. And then in addition to that, there's another whole raft of stuff down here in terms of volatility. You can sort on implied volatility, whether you've got breakouts on implied volatility. And then finally down at the bottom here, we've got also volume. We've got volumes in terms of options and all sorts of things, percentage change in terms of calls and puts and everything else in between. So it's hugely powerful. I've got this set up as 100, and it basically just lists them for you, and you can change to, you can go and sort on something else. Let's have a look at, I don't know, percentage gainers on the day. There we go. That just gives us the biggest percentage gainers on, sorry, dollar gainers on the day. So this will tell you, who's had the biggest dollar gain on the day, and we can just go through and who's losing on the day. Let's have a look, dollar losers on the day. There we go. $25 down on that particular stock. Don't know why. 24, 13, and these are all down in single figures. This is all updating in real time. So it's massively powerful. It's a hugely powerful platform. And finally, over on Market Scanner, this is where you can actually create scans, and there are some that Tradestation have already set up, but you can actually create your own. So for example, here we've got bearish engulfing, fine stocks forming a bearish engulfing pattern, bullish engulfing, same sort of thing, candlestick hammer, hanging man. We're looking for growth stocks, growth and value. There's all sorts of things, and as I say, you can create your own scan in here. I'm not going to do it now. I will set one up perhaps over the next few weeks, and you can see how it all works together. But obviously, the big difference with, as Anna said, with stocks, you're dealing with thousands. You're dealing with, and if you add in all the various options in terms of, just get rid of that. If you add in all the various combinations in terms of time that you maybe want to look at, then the number of variants runs to tens of thousands that you are trying to deal with. So the whole key to this is being able to search and select on various criteria, and then to generate those watch lists, and those are the stocks that you keep an eye on. And obviously you've got your filters as well. You've got to decide what you're going to filter on, how you're going to filter. We used to do this manually years ago, and we used to sit in front of a screen for about 3 or 4 hours in the evening, and we would go through every single chart in the primary US and Canadian markets to actually identify the charts that we were interested in. That is literally looking at each chart for probably about a second, no more, because when you're looking for something particular, if you're looking for a saucer, for example, you're looking for a stock that's been sold very heavily longer term, has created that nice rounded bottom. It's just starting to come out of it. It has had a massive accumulation phase building over time, and yeah. Oh, is it? Oh, well, never mind. And you are looking at, that opportunity. They are very easy to pick out, and you can do that very, very easily, very quickly. The same is true at a distribution top. If you're looking for a top that's been developing for a long time, it's also true that you can pick out certain combinations of candle patterns that, and as I say, you scan manually. Using a system like this sort of methodology where you've got the power of a platform like this, where you've got 1,000 options on the radar scanner itself, you then filter all your stocks and you've got something manageable to deal with, because otherwise it becomes almost impossible. So it's just a very powerful platform. We are, as I said this morning, we're working on NinjaTrader. We are going to develop the indicators into Market Analyzer. Market Analyzer is not so powerful, but nevertheless, it gives you that huge leverage in terms of scanning for stocks and sorting on any criteria that you may have developed for your watch lists. Let's just quickly go back onto Ninja, just see where we are. Not much going on, it's all flattened off. The sort of rush up has come to a bit of a halt as expected. I think Anna said the recording has stopped for some bizarre reason, so I will be truncated at some point. So this, what I'm saying now, will not be recorded, but there we are. Let's have a quick look at currency futures, see what's going on in the other markets. Decent pound buying. This is the 6A, this is the 6B, this is the 6C. So we've seen dollars selling for a little while now since the open, so that's been selling off. So the majors, certainly those majors, have been rising nicely. But when you look at the 6E the 6J in particular, and the 6N, that's New Zealand dollar, 6E is euro, 6C is CAD dollar, not dollar CAD, so it's CAD dollar, it's the inverse. When you look at the dollar yen, or the yen dollar rather, it is completely at variance with what is going on, broadly speaking, in terms of 6A, which is bullish, 6B, which is bullish, and 6C, which is bullish. And this is going nowhere, nor indeed is the euro dollar, and nor in the New Zealand dollar is mildly bullish, but not as strong as the top three. And when you look over at the CSI, and of course the CSI we use in spot markets, but it applies equally well to futures markets as well, you can see why. Because if you look at the euro dollar here on 5 minute, it's going sideways. What have you got? You've got the euro and the dollar traveling in the same direction. So you know that currency pair isn't going anywhere. Equally, when you look at dollar yen, the red line, and the yen, the magenta line, traveling in the same direction. It's not going anywhere on that time frame. And it's another aspect of using indicators which apply not only to one market but also to another. CSI and all the other indicators, the forex specific indicators, work just as well on currency futures as they do on the spot market, exactly the same way. It's just the numbers are slightly different in terms of the futures contracts. Finally, let's just have a quick look at oil. Oil's been very bullish, come off a little bit yesterday. It was down heavily this morning, but it's really recovered, had a nice bullish rally. So that's coming back up again. Lots going on at OPEC in terms of supply and everything else. But that's certainly recovering. See the wick there, down to 75, we're back to 77, almost back to $78. So that's pretty much as we suggested it would be, with a bit of congestion. Gold is really struggling. It's been struggling for a long time. Just pop that up. There we go. That's where gold is. It's really struggling to get back to 1800. If it's going to get back to anywhere, it's got to get back first of all to the VPOC, but it's got to battle its way through this lot here. We've got resistance in terms of price. We've got resistance in terms of volume. We've got a VPOC here. We've got more price resistance above, and we've got more volume here. If gold does manage to get back to 1840, I'm not quite sure how it's going to do that, but if it does, then it's free and away, and it should go all the way up to 1920, and possibly beyond. That's a big ask. The key for gold, personally, I believe, is inflation. The problem is that we have, certainly in the UK at any rate, there is stagflation on the horizon. In other words, rising inflation with an economy that is stagnant or falling, and that's the big fear for the central banks. Because if they start cranking up inflation rates, interest rates, which will be, is the general accepted leverage that they would use with rising inflation, they will want to curb that with rising interest rates. If they do so, that is going to potentially raise the prospect of stagflation, which is rising inflation but falling economic output. So, that's their problem. And it's partly the reason why gold really hasn't benefited as much as one would expect it to, I think, from inflation, which should drive it higher, but it really hasn't. It's just stagnating for the time being, as much as I'm a gold bug at heart, I suppose, although I trade both sides of the market. But, gold is a precious metal, and it's the sort of thing that you expect to see rise because it has that precious aspect to it. So that's where we are with the commodities. I'm going to wrap up there because we've gone way over time. This is where you'll find the indicators over at quantumtrading.com. All the platforms there, MT45, NinjaTrader 7.8, TradingView, and Tradestation. If you invest in one indicator or just 2 or 3 indicators and you want to upgrade in the future, absolutely no problem. You get a full credit for what you purchase with us for life. We will always credit you with previous purchases if you want to upgrade to something else. Whenever you do buy 1 or 2 indicators and you want to upgrade to the full package, absolutely fine, no problem. If you invest in the full package, then you will receive all future indicators we develop free of charge. We've just added 2 more to where are we? Tradestation. We added the cryptocurrency strength indicator, and we also added a radar panel. And for all customers who have that particular package, they would have got those indicators free. We're going to develop some for Ninja. So if you have the NinjaTrader package, full package, you will also get the market analyzer developments, where we're developing the indicators to work in market analyzer. So if you have the NT full package, you'll get those too. Just to answer that question from earlier on, if you go to any of these, doesn't really matter where we go, let's go to Ninja. You will find there all the support pages for all the indicators, how to install them, how to configure them, all the options available. And then over here, you'll find all the videos for them as well, hundreds of videos on all the various indicators, loads of them there. And as I say, they're on all platforms. So you'll find all of those on each of the platform. Will have a support page with all the various pages, and it'll also have a video library for the indicators. This is the Forex education program. It's called the Complete Forex Trading Program because that's precisely what it is. It covers everything you need to know to trade Forex. And indeed, whether that's spot or futures, it's the same thing. There's around 450 lessons in there, and there are, I think, around 250 hours of video, 13 PDF downloads, and also access to Anna and myself on the VPA Traders chat room, which is down here, which I've actually got up here somewhere. There we go, that's it there. And we also bolted on the funded program. So you trade our money, not yours. So there's no risk to you. You join the program, you start with a $5,000, $10,000 or $15,000 account. There is an entry cost, it's very low. You pay that once, that's it. That's your only outlay. You cannot lose any money, it's our money, not yours. And you trade those accounts. We put them in place to give our students, I know we've got students on the call, we put that funded program in place to give our Forex students, and it's only available to Forex students. You will not have access to this if you're not on the program. It's to give our Forex students the not only the ability to leverage what they've learned on the program, but also to give them the confidence to trade large capital accounts. So once you start with a 5, 10, or 15,000 account, we multiply that by 4. So if you start with 15, you go up to, we give you $60,000. And once you've completed that particular level at 60,000, you go to 120,000. We double it thereafter, right the way up to 2 million. As I say, it's our money, no risk to you. Finally, on Anna's site, annacooling.com, this is where you'll find all the books, all on Amazon in Kindle and in paperback, and all the links to all the various sites and all the analysis we do down the side here. Anna's actually going to start a Forex site as well, which will be purely Forex specific, moving away from Facebook. That's it. Thank you very much indeed for coming along today. I'll just check there any other questions. Thank you, Keith, much appreciated. How many cells available on the TV radar? That is limited to 10, I think, on our trading view. Yeah, radar, it's 10 cells on that. It's not obviously as comprehensive as Tradestation. Is it possible to scan stocks on TradingView? Absolutely. Any instruments on there can be put in there. I think I've got one showing with, what have I got here? Yeah, I've got, let's pull that over. There we go, just to show you. That's with, this is cryptocurrencies. So we've got the cryptocurrency strength indicator on the left. And these are some of the cryptocurrencies down here with some of the indicators also down here in terms of volatility and the Camarilla levels. So yeah, you can certainly do that on TradingView. There we go, that's us done. Thank you very much indeed for coming along today. Hope you've enjoyed it. We will see you again next week. Enjoy the rest of the trading session. Enjoy the rest of the trading week. Have a great weekend. We will see you again soon, and bye for now.